Good evening, everyone. This is Ajit Mishra. We're going to start shortly. All right, let's get started. So welcome once again in the weekly webinar of Week Ahead with Religare Technicals. In this webinar, we talk about how the markets performed during the passing week, what all sectors which performed well, sectors which didn't participate, top 5 gainers, losers from the Nifty 50 basket, followed by our review on the key indices, both Nifty and the banking index, followed by some of these stocks which are looking positive or negative based on the chart formation, followed by a quick poll, and then we start with the Q&A session. In case if you have any question related to the presentation or anything related to the sector that we have discussed, you can freely ask. No stock specific queries because the idea behind this webinar is to share the insight which is in general beneficial for the larger audience, not for any individual stock specific approach or portfolio. So yeah, let's start with a quick disclaimer that the major reason behind this webinar is to share the insight based on the technical observation that we have, and it's not a trading or an investment recommendation. So before making a decision based on the information shared, please check with your financial advisor. So after 2 weeks of decline, finally we had a breather in both the indices. Both Nifty and Sensex managed to gain nearly 1%. Last week we have tested the long-term averages in the Nifty index around 18,800, and we were anticipating that there could be a bit of a breather. That is what we saw. That Nifty could manage to hold the gains. That was important, and it extended gains that we'll discuss in details in the following slide. But yes, both the indices after 2 weeks of sharp decline ended in green. As you can see that majority of sectors participated in the move, barring auto, which ended slightly on the negative side. Realty, media, energy, financial services, banking, they all done exceptionally well, wherein realty outshined the others with a very strong margin, with up nearly 10%, more than 10% rather. Talking about top 5 gainers, losers, BPCL, Apollo Hospital, Titan, Hindalco, Ultratech Cement. These were the names from the Nifty 50 basket, which were the top gainers in the range of 4 to 8%. On the losing side, you will see that in line with the sectoral performance, top 2 losers were the auto counters, Maruti and M&M. Then we have Dr. Reddy's, Bajaj Finserv, and Tata Steel, which also ended in the red. Now let's come to the point that what we are anticipating in the next week. So first we'll talk about Nifty. So if you remember that last time, during the webinar, we've discussed that 18,800 is critical 200 EMA. So market might, witness some breather, but overall tone, to regain momentum, we need to cross multiple hurdles. So yes, we have tried to test the first hurdle around the 100 EMA in the last trading session, that is today. Nifty almost tested that mark of 100 EMA around 19,250, 270 zone. Next hurdle, 20 EMA around 19,350. So we feel that we are closer to the resistance band now again. And the recent rebound is more of like a gap up opening due to the global markets, but followed by a range bound move till the end. Though in the end, we have managed to end the session with a positive note, means 0.5% gain, kind of a gain in both the sessions. But post gap up opening, the follow-up buying was missing. Positive part was that stock specific, sector specific, yes, we are seeing opportunities on the long side. The broader markets, did well in the passing week. But somehow, it's compensating the kind of I wouldn't say underperformance, but yes, the kind of lack of momentum that we have in the index, the other things are helping the participants to remain busy. So for the coming week also, we feel that since we are closer to the upper band of this consolidation, as of now, this 19,350 and 19,500 will continue to act as a strong resistance area. So in index, we are not anticipating outright buy or a very strong up move. We are still anticipating that there will be a breather in the coming week, and to overcome these hurdles is going to be very decisive move that we need in banking and the other heavyweights. So as of now, we feel that this is the area where one can again start looking for shorting opportunity, at least in the index. On the downside, 19,000, this recent low would act as an immediate support, and then the 200 EMA around 18,800 that would provide the support. So broadly, this is the range that we are anticipating: 18,800 to 19,500. Intermediate, 19,000 to 19,350. Now, banking. So in line with the Nifty, we have seen the banking also have recovered considerably in the recent days. But considering the past underperformance, means the index was the first one to slip below the long-term averages. And in the last trading session, though we have managed to close above 200 EMA, you can see this red line and Nifty is closed. But it's not a very decisive candle. So means gap up opening followed by a range bound move till the end. It's not a very decisive close, I would say. And plus the kind of distribution that we had, as you can see, it's a double top formation that we have a negative formation followed by a breakdown. So we are again closer to the neckline area of that pattern. Plus we have resistance zone of 20 EMA and 100 EMA on the daily chart. So all these factors would cap the upside in the banking index also. So both Nifty and banking index are largely aligned, means we are not seeing outrightly, positive move. It's a respite that we are seeing in the private banking majors, followed by up move in the PSU pack, which is helping the banking index. But we still have multiple resistance to cross. So 43,500, 44,100 will continue to act as a strong resistance area for the banking index as well. Downside 42,500, 41,900. This zone will be the area of support again. So net, both the indices, though we have seen a recovery, but it lacks decisiveness, the recent up move, and we are closer to the resistance marks. So for the index, traders, it's prudent to prefer hedged position, not outright bullish, position at the current levels. In fact, one can look for shorting opportunities also with the stop of the upper bands of the resistance zone that we have discussed. Now coming to the stock specific ideas, as we were discussing that on the stock specific front, on the sectoral front, we are still getting opportunities on both sides. But today we're going to talk about all three ideas wherein one can look for accumulation based on daily or weekly or monthly chart formation. The first one on the list, we have Cann Homes. So Cann Homes, after this major consolidation that we had on the monthly chart, for the last 5 months, as you can see, that is negligible move that we have seen in the stock while it was holding the long-term averages on the monthly chart. So this kind of very narrow range congestion usually end up with a very strong up move or a down move. So as of now, we are anticipating, considering the kind of consolidation that we had in the past, we are anticipating that it is likely that there could be a breakout instead of a breakdown. So with level around 700 being the critical support area, one can look for accumulation, fresh accumulation in Cann Homes even at the current levels. Next one on the list, GOI Property. So realty as a sector, as we have just shared, has been outperforming from the last several weeks. This week it was 10% kind of a gains, but we still feel that certain pockets in the realty space have room left, and GOI Property is one of such names. So after spending nearly 2-3 months under the consolidation range, we have finally seen a breakout in GOI Property this week with very strong volumes. You can see the uptick in volumes on breakout candle. So this indicates that the catch-up move means Oberoi Realty, DLF, they are anyways doing exceptionally well. So there's a possibility of a catch-up move in GOI Properties in days to come. So this is one such counter apart from Canfin, which one can look at. And lastly on the list from the OMC space. So within the oil and gas space, OMCs are witnessing decent recovery, and IOC is leading from the front, up nearly 10%. But we feel it's just the beginning of the next leg of the up move. There was a consolidation, month-long consolidation in the stock, followed by a breakout, then marginal retracement towards the neckline area of that pattern, and again a resumption of the trend. So this is clear textbook, formation wherein the stock retraced to the major support and then witness a rebound and reclaims a record high. The uptick in volumes is confirming the up move in the price. So all factors are aligned. Means there's no doubt about that. Earlier we had underperformance in stock like BPCL, HPCL, but this kind of formation that we have in IOC, that really confirms that the positive tone that we are seeing in OMC is likely to extend in the coming week as well. So net, both the indices, Nifty and banking index, upside seems capped. Look for hedge position, and aggressive trader can look for shorting opportunities also, but prefer option strategies instead of naked longs and shorts. Sector specific, stock specific means broader indices. We are still getting opportunities on both sides, but our preference for the day is for the week is Cann Homes, GOI Property, and IOC, which are looking very strong on charts. So this is all from the presentation part, and then we'll have a quick poll now. So please fill in your feedback, and then you can start posting your question using that Q&A tab. Once you're done with the feedback, you can start posting your question using that Q&A tab. All right, let's get started with Q&A now. See, instead of using raise hand, please write your question in the chat box using that Q&A tab, sorry. All right, so I've requested in the beginning, so please avoid stock specific questions. Anything related to any particular sector, definitely we are here to answer, but not individual stock specific queries, please. Okay, so first question from Mr. Ajay Gupta: is there still time left for the chemical sector to move or just to stay away? So, Mr. Gupta, in case if you remember that those who are regularly participating in this webinar, we have mentioned this, that chemical sector is prudent to stay away, and we are still not seeing any sign of reversal in the chemical space if the view is short term. In fact, we are seeing fresh breakdown in the chemical counters. So for a time being now, yes, it's an avoid. And in case if you have a view for the long term, you can look for accumulating gradually, but not the one go. Okay, next we have, are we seeing any sign of reversal in IT? So yes, see, IT is not participating much on the downside. Means yes, we are seeing gradual decline in the IT majors, especially in Infosys, TCS. Wipro is anyways underperforming the pack. But the pace of decline is very gradual, and we are some of the names like Persistent, Birlasoft, HCL Tech from the large cap IT name, which are holding very strong. So keeping that in mind, we feel that one can look for IT majors for accumulation if the view is medium to long term. Short term, they might continue to consolidate in the range. Okay, so next question from Mr. Rajesh Lal, that week before Diwali, what is the most likely trend for the week, specifically any sector? So that is what we have shared, Mr. Lal, that we are seeing market witnessing recovery, but we are not very, uh, you know, upbeat about the trend that we are seeing in the market right now. Means the recovery that we are seeing, I doubt that there will be any meaningful recovery until we surpass 19,500 in the Nifty. So let the index surpass 19,500, and then we can say that this recovery which we are seeing in the market is likely to extend. Otherwise, there's a possibility that we might see, profit taking or resumption of the downtrend again. Instead of maintaining sector-specific approach, cause barring couple of sectors, majority are witnessing decent traction. So we feel that focus more on stock-specific approach. Like some of the names that we've shared, if it fits in your buying criteria, you can look on those names. So no particular sector, but yes, individual stock specific across the board. In fact, in the underperforming sector also, we are seeing buying opportunity. Just to give you an example, that within the banking space, Federal Bank is holding strong. Then we have some of these PSUs name, they are doing well. So focus on that aspect. Okay, next we have question from Mr. Arun on pharma sector. So yes, pharma, I'll just revisit this space once again. So pharma, I feel, Mr. Arun, that it should see, further recovery. Like this week, it was not much, nearly 1% kind of a gains. But it tested the critical support around 14,600 marks. So we believe that this move should extend. But within the pharma space, again, we are not seeing, all the stocks participating. So some of these names like Cipla, Sun Pharma, Granules, these are the names which are looking upbeat, while other names like Dr. Reddy's, Divis, they might consolidate to trade in the range. Okay, so Mr. Vikram has a similar question, but for a longer duration. So pharma for 3-5 months, I feel the view is going to be positive. So yes, one can, but again, one needs to be selective within this space. So by saying that the sector is going to be positive, not outrightly all the stocks are going to participate. So one need to be selective, and some of the names that we have just shared, one can look at those names for the investment purpose. All right, next we have question from Mr. Raman Singh on consumer durable goods. So see, we are seeing the sign of a breather now. Means they are not inching higher, but they are not, seeing any decline either. So it's a kind of a phase that there's more of like accumulation going on. And within this space, we feel that Voltas is one such name that one can look at, wherein we are seeing a decent amount of the consolidation in the last 4-5 months. There is one such stock. Then we have Havels also, that we are seeing a similar kind of a trend after a strong up move, month-long consolidation. So these are some of the names within this space which can do well, let's say with the 3 to 6 month point of view. Okay, next we have Mr. Galaxy M11. His name is not mentioned, and his query is on telecom sector. So telecom space, I understand that the query could be the reason that we are seeing recovery in Idea after a long period of underperformance. So yes, the move indicates that there's a possibility that the stock might inch toward 15 to 17 levels. But as a sector, nothing has changed much. Means it's more of like earning reaction plus some of the recent development that we are seeing in the sector. So Bharti Airtel anyways will continue to act as the pillar, means the best performing name. Then we have the Geo part in Reliance, and then Idea. So those who were stuck, since ages in Idea, this is an opportunity that in case if you wish to exit, then maybe closer to around 17, and best case scenario 20 could be the area where it might head to. So depending upon your investment horizon and risk appetite, one can look at those names. So Mr. Lal, we have shared about Cann Homes, Godrej Properties, and the last one was IOC. These are the top 3 names which we feel can do well in the coming week. All right. So with this, we have answered all the queries. So just in case if you missed anything during the presentation, you can go to our YouTube channel, Religare Broking, and the recording of this webinar, which is live streamed on that channel, you can access the same as well. So, all right. So with this, we can end the webinar here. Thank you everyone for participating. Same time next week, we'll connect again. Thank you.